Dividend investing is the equivalent of pay me right now. And unbeknownst to some investors, there's a multiplicity of dividend income strategies which have led to a multiplicity of dividend ETFs. And outside of the industry sector fund area, I'd say dividend ETFs, that particular category, is among the largest in sheer quantity of funds, along with quantity of assets and sheer quantity of confusion. Sounds like a delicious recipe for an ETF battle. What do you think? Today's audience-requested matchup is a triple header between dividend-focused ETFs from Schwab, Pacer, and BlackRock. Stick around. You're watching ETF Battles. I'm Ron DeLegge. Thank you for tuning in. This is the place where we congregate to analyze and judge ETFs versus each other. And if there's a certain ETF contest that you think we should do, well, just send me your ticker symbols in the comment section below or on our X feed at ETF Guide. And if we choose your battle, you'll win your choice of an ETF Battles coffee mug or a shirt. Be sure to check out the Margin of Safety tool at etfguide.com. I built that tool to protect and grow your portfolio, and it's part of a series of tools that we're building to help you become a better investor. Visit the description section below for the link, and while you're there, hit the link to our program judges and our program sponsor direction. Today's triple header was requested by a viewer named John, and it's between three dividend ETFs from BlackRock, Pacer, and Schwab. It's ticker symbols SCHD versus COWZ versus DGRO. So thank you very much, John, for your excellent ETF battle suggestion. Be sure to hit the description section below to claim your prize. So judging today's high-stakes dividend ETF contest is a duo extraordinaire. We've got Frank Tedesco with Astoria Portfolio Advisors and Athan Psarofagis with Bloomberg. And it's Frank's first time on ETF Battles serving as a judge. So we're going to give you a cordial and warm welcome. Thank you, Frank, for being here. And it's great to see you both.
Happy to be here, Ron. Thank you for having me.
Yeah, nice to see you guys. Welcome, Frank.
So our four battle categories are going to be cost, exposure strategy, performance, and yield are combined. And then we've got a mystery battle category where our judges can pick a single factor or multiple factors that they think are important to today's contest. They can also nominate wildcard ETFs or opt for split decisions. It's up to them. I've got the scorekeeping chores, and at the end of the show, we'll declare an overall winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. So let's kick things off with the first category, that's cost. Frank, please get us started.
Thanks, Ron. So cost from an expense ratio perspective, you're looking at the three fact sheets. You got Schwab, SCHD, COWZ, and DGRO. It's pretty obvious that the Schwab and the iShares ETFs beat COWZ on this one. It's 6 basis points for Schwab, 8 basis points for iShares, and then whopping 49 if you're just looking at the expense ratio. So for me, in this category, I would say there's two clear winners over the three, but I don't favor one over the other. 6 versus 8, in my perspective, is not a big discrepancy.
Okay, I got you for split decision. Thank you, Frank. Athan, you're up next. How do you see it in terms of cost?
Yeah, I think Frank did a good job on that. Schwab is pretty much they're like a little mini Vanguard. So most of their offerings are pretty cheap. They're just 6. It's their biggest ETF. It's massive. It's 48 billion. So it trades quite a bit. So the spreads are pretty tight there. So you're getting pretty much at 6 basis points for that. DGRO, which is part of iShares core lineup, which is their low cost 8. Again, really cheap, trades a lot. There's 23 billion in that. COWZ, which we'll get into a little bit more, it's a little bit different than a traditional dividend strategy, but Pacer's not really known for being the cheapest. But I think if you're just looking at cost, it's really hard to compete against Schwab. So this one's a pretty clear winner for the Schwab high dividend equity ETF.
That takes us next to exposure strategy. And Athan, you're still up, so break it down for us.
Yeah, this is where it gets pretty interesting. So let's look at the Schwab and the iShares product first, and we'll look at the Pacer one after. So Schwab's, they're really just tracking dividend-paying names. So Schwab's methodology is looking for companies that have paid 10 years of dividends, and it also adds in a fundamental screen, which I like because then you're sort of getting a high-quality dividend payer, which is pretty nice. iShares, on the other hand, is looking for dividend growers. So it's companies that have increased over the last 5 years and also still have more room to pay out. So they look at something called a payout ratio. So they're making sure that there's still room that can keep growing. And so this one's a little bit different. It's not saying that it's not high quality names, but it's looking for names that might continue to keep raising their dividends. And the Cash Cows one, which I like this product a lot. It's just looking at companies that generate a lot of free cash flow. Pretty standard, right? I think of this pretty clear-cut methodology, just ones that have a lot of cash on hand. If you look at sector exposures, you get a lot of industrials in the dividend payers, a lot of sort of kind of more boring names, healthcare. You don't get a lot of tech in the Schwab product. You get a little bit more of that in the iShares product. But one thing to keep in mind on the cash flow one, it's very heavy in energy. It's like over a third in energy, and only about 7% in tech. So I think because they're so different, if you're just looking at quality dividends, I like the Schwab methodology. If you're looking for something a little bit different, and one that generates free cash, it's really just the Cash Cows ones. But just because, even though I know this is more of a dividend one, I really like the COWZ methodology quite a bit. So that one's going to be my winner on exposure.
Thanks for the outstanding analysis, Athan. Your turn next, Frank. How do you see it when it comes to exposure strategy between these three ETFs?
Thanks, Ron. I can't really argue with Athanasios on that one. Laid out the methodologies very well. I think when it comes to dividend growth as the overarching battle category, I would say I would go with Schwab on this one. It's got the highest yield. It goes for large cap companies. But I personally like Athan, like COWZ, because it touches on the mid cap space. So it's a little bit versatile when building your portfolio. You could use this as a component in a few different ways, whether you want to touch your large cap dividend or you want to fill out your mid cap a little bit. It's a versatile product.
And so which one is your choice among these three in terms of exposure strategy?
I'll have to go with COWZ as well.
All right. Very good. That takes us next to performance and yield. Now, we've combined the two, and we've added yield, of course, since this is a dividend ETF contest. So, Frank, you're still up. Break it down for us in terms of performance and yield.
Thanks, Ron. So, like I said, if you're looking at dividend, this is the Dividend Showdown. Schwab has the highest yield at about 3.5%. COWZ is at 2 1/3, and DGRO's at 2 44 basis points. So yield off the bat, 3.52%, that wins. But if you look at performance and yield combined, which is what we're looking at, COWZ is the clear performance winner. And even taking into consideration both yields of those products, COWZ is still the winner. I'd like to also add that Sharpe ratio, COWZ is the winner. Going 1 year, 3 year, 5 year, it's close between the three of them. But for me, I'm looking at the Sharpe ratios. I'm looking at performance with yield considerations. So COWZ is the winner for me here.
Very good. And if you could just tell our audience Sharpe ratios, some of them might not be familiar with that particular stat. What is that?
So Sharpe ratios is looking at risk-adjusted returns. Without even looking at the risk-adjusted returns, COWZ is the winner. But if you take a look under the hood and you're looking at risk-adjusted returns, the Pacers ETF has 0.42, and this is over a 1 year basis, 0.42 versus iShares 0.26 versus Schwab's 0.12. And as the 3 year, it's the winner as well. And 5 year, like I said, it's close, so there's no clear winner for me there. But the 1 year and 3 year mark, these were some difficult years we've been through. And for this to come out, it's the top of the line of these three.
Thank you, Frank, for that added detail. That takes us next to Athan. For performance and yield, break it down for us. How do you see it?
Sure. So let's do the opposite. Let's see which one I can eliminate quickly, and that'll be DGRO. Again, it's nothing personal. When you just look at the facts, one, their yield is 2.3 versus what Frank said, 3.5 for Schwab and 1.8 for COWZ. So you're not getting that much more yield than over COWZ. And what the other thing that sticks out to me is when you look at overlap, Schwab and COWZ both don't have much overlap with the S&P, so I think they're pretty nice diversifiers. You're getting almost 50+% overlap with DGRO, so it's also, I think, just not adding a diversification element to it. So I think you can just quickly, that would be last on my list. And if you're just looking purely at yield, Schwab is the better pick. You're getting 3.5, but when you factor in performance, over the long term, COWZ beats all of these funds. Schwab is the better dividend ETF over DGRO, but COWZ is the best performer of this whole group. So you're already getting almost a 2% yield on COWZ plus the nice performance kick. I think that's a pretty good deal. And the other thing that really impressed me about COWZ is over the 5 years, it's the only strategy that's beaten the S&P of this group here. So I think that was also really impressive. And it's doing it with very low tech exposure. It's got only like 7% tech. So to me, that says that free cash flow seems to work across different sectors, and most of the market's been led by tech, so I like that it's been working so well without the tech pump. So with that, if you sort of balance yield and performance, again, I know it's not a pure dividend play, but I think you're getting some nice yield kick on that free cash flow strategy. So COWZ would be my pick for performance and yield combo.
That takes us next to the mystery battle category. This is where our judges can give us that single factor or multiple factors that they think are crucial to today's matchup. And it's a mystery, and it's also a surprise. So, Athan, surprise us. What is your mystery battle category, and which of these three ETFs wins it?
So one thing I like to look at is factor loading. So factors meaning like value, quality, momentum. And when you run, I'm a big fan of the quality factor, and I think that's something, given the current market environment, is investors should be looking at. You get a really nice high quality loading in the Schwab ETF, more so than DGRO. And unfortunately, you don't get a high quality rating in COWZ. It's more of a value play. So if you really like value, COWZ is probably going to be your better bet. But because I do like the quality screen that they're using, and they got that tilt towards quality, from a factor perspective, I'm going to pick the Schwab dividend product because I do like the high quality yield that you're getting compared to some of the other names.
Frank, you're up next. What is your mystery battle category, and which of these three ETFs is your winner?
My category, I'm going to go with style, which is a combination of value versus growth and size. And despite this being a dividend growth showdown, I'm not arguing with Athan's analysis. I think Schwab has the quality aspect in it. I love that. But I do really like how COWZ targets both the mid and large cap value section of the market. So in the style box category, it's closer to value, but it's more of a blend between mid and large cap as opposed to the other two, which focus more so on the large cap space. So I'm going to go with COWZ in my mystery battle category.
Well, we've arrived to the part of the program where our judges can give us their overall battle winner. How will this dividend ETF showdown be scored? Well, let's give our judges a final chance to weigh in. Frank, you're up. Give us your winner.
Thanks, Ron. My winner, despite me showing a lot of love for COWZ over this battle, the dividend growth showdown, my winner is the Schwab U.S. Dividend Equity ETF, SCHD. I just think that it's more true to the category itself. It's got the highest yield. It focuses on large cap companies. So despite me loving COWZ itself as an ETF product, I'm going with Schwab.
Wow. You shocked me on that one, Frank. I didn't see that coming. It's a great way to make your debut on ETF Battles. Shock the host or the referee. Athan, how do you see it in terms of your overall battle winner?
I gotta say, I was shocked too, but he laid out good points, and I think it's fair. I think if you're just looking for a straight dividend strategy, the Schwab one is the better of the two. Because I like I like different strategies, and I think COWZ is very unique. I think it's one of the more unique products out there. There are a lot of dividend ETFs out there, and Schwab and iShares, they're big firms. I like that. Pacer's a little bit smaller. They have something unique. It's done well for them. I also just am a big fan of the free cash flow methodology. I think it seems to have performed really well over time. So I think each strategy has its pros, but I think overall I like the uniqueness of the COWZ strategy. So that's going to be my pick.
Well, our judges have spoken, and according to my battle scorecard, this winner is a split decision between COWZ from Pacer and SCHD from Schwab, and our judges laid out their arguments pretty darn well. I thought COWZ was going to be the winner on this one. It had a lot of votes, but as our judges pointed out, COWZ obviously is more than just a dividend strategy. It focuses on not just those big, large cap companies. It does have some mid cap exposure to those smaller stocks, but it also focuses on free cash flow. It's got a little bit of a value tilt, and also the performance, which really impressed me. It's beaten the S&P 500 rather handedly, and it's done that with almost no technology exposure, which is pretty impressive. And also the Schwab dividend ETF, that's ticker symbol SCHD, as our judges pointed out, has the highest yield in this contest, has a quality screening, and of course, it also, I think, has its own fan club on the internet, if I'm not mistaken. So a lot of fans of that particular ETF, but I think both judges laid out some awesome points, and I think at the very least, we've given you a great starting point for doing more research and making an informed decision. A final thanks to our program judges, Frank and Athan. We appreciate your insights. Keep up the good work, and we'll see you soon.
Thank you, Ron.
Thanks, guys. This was great.
Visit the description section below for research links to our judges. And while you're there, check out the link to our program sponsor, Direction. Well, keep your ETF battle suggestions coming. Send me your ticker symbols in the comments section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching. We'll see you next time.